Awesome. Hey, everybody. Welcome to live stream, Memory's first ever live stream. So this is something new. I guess people who are part of our audience already know that we've been doing webinars for a long time. So we're kind of now taking the leap into live streaming, which is pretty cool. So not only are we on Zoom, which I guess a lot of you are really used to, but also we're streaming on LinkedIn as well. So feel free to join us on LinkedIn in the future. We'll be doing plenty more of these live streams throughout the year. So today, I wanted to talk about startups in smart buildings and specifically, some of the work that we've been doing looking at the startup landscape. So just while people are joining with the feed, I'm going to give you a brief overview now of what we're going to discuss. Also, should say, we were supposed to have someone from JCI Ventures join us today. Unfortunately, Yusuf can't join, so you're stuck with me today. But of course, we want to make this interactive. So if you have any questions, we will be able to take them. Maybe you can leave those for the end. So as it says here, any questions you have, type them in on LinkedIn or type them in on the Q&A box on your Zoom console, and we'll take them at the end of the stream. And we've got about 25-30 minutes, so plenty of time to go through some interesting content. So startups, specifically in the smart building space. So over the research that we've been doing for quite a few years now, coming up for, I guess, 8 years, looking specifically at the landscape for startups, we've managed to identify over 1,200 startup companies that are active in the management and operations phase of the global smart building, commercial building space. So, of course, that's different to how some people might define what, let's say, prop tech is, or some of the other terms that are used. We specifically look at the management and operations phase, and that's what we'll be discussing. And of course, I suppose it's also really important to understand what a startup is. I think it's different for lots of different people. I'm sure other organizations, people have a different definition to us, but what we say it is a private company formed no earlier than 2012, so basically 10 years old, that is focused on the commercial and industrial buildings market and is not a subsidiary or an acquisition of a larger company, and also will more than likely have some kind of venture capital investment as well. So I think hopefully everyone has joined now who wants to join. So let's get on with looking at some of the specific content. So what I'm going to go through today, some of these slides, is from reports that we've produced this year in January and February. And it covers what we've been able to track in terms of the investment and also acquisition activity within this cohort of companies. And then also look at how we've segmented and described who they are. So you can get a real sort of interesting look at what the landscape is in terms of where the money is being invested in, what types of companies, et cetera, et cetera. So I would encourage everybody, if you get 5 minutes, go to our website, memory.com. You can take a look at a bit more in-depth at these two reports that we're going to look at. And I forgot to say earlier, actually, we are recording this session as well. So later on, I'll be posting a link to it on our website, and you'll be able to get the recording on YouTube. So please share it with your colleagues. So as I mentioned before, we've tracked over 1,200 startup companies that fit the definition I described, so founded since 2012. Now, is that an absolutely definitive cohort of companies? No. I mean, we obviously do our best to track as many as we can. I think it's pretty extensive, but I'm sure that there are some who maybe have slipped through our net. Feel free to comment if you think that we've missed ones, or are there any specific startups that are interesting that we should definitely be tracking. So of those 1,200 companies, there are just over 800 that still fit our definition of being a startup and being active at the moment. And then the rest of them, have either been acquired and are now part of another company, or that tech has been absorbed into another company. Some have also planned or completed an IPO. Some have also completed or planned a special purpose acquisition, SPAC, essentially an IPO, of course, but we've made the definition there. And 77, that's around 6%, we have identified as either being closed or inactive. Sometimes it's just not possible to fully determine what the status is of that company, but essentially we think that they are inactive. So yeah, that's what we have tracked this year. So in terms of how we think about the operations and maintenance phase of smart buildings, this is how we categorize and segment the market. So we put it into sort of 4 broad buckets: physical security and safety. So that's looking, if you can see this diagram here, areas like video surveillance, video management software, video analytics, through to access control, biometrics and facial recognition, mass notification, etc. We also look specifically at the IoT in commercial buildings, and that covers areas like networking, cybersecurity, and digital twins. Then, of course, building energy management. Now, that's a massive segment for us, and we'll look at that on the next slide. And then finally, prop tech. Okay, so again, this is kind of like our definition of prop tech within the operations and maintenance phase. And this covers lots of different areas. So like water management, drones and robotics, how they're being used, asset maintenance, indoor air quality, workplace management and occupancy analytics. So a lot going on in that space as well. So as I said, Lynn, how... Mm-hmm. All right, we're back. Sorry about that. So first time we've done it, and we're just sorting out some of these slides. So I don't know what everybody saw, but we'll skip this one. We'll go in here. So I was talking about the landscape of startups, 1,200 startups that we've identified since 2012. And of those, we believe around 800 are still active. 352 have been acquired or merged, and 77 of those are closed or inactive. And then I talked about the categories and segmentation. So we have sort of 4 broad categories and then subcategories of those. So I mentioned physical security, and there you can see those on the bottom left. And then we talked about building Internet of Things, building energy management, which again is a massive category for smart buildings, and finally prop tech. So of those different segments of the market, then we have looked here at how we categorize those, and in terms of the number of them. So of those 800 startups that are still active, how they define and how they split down. And you can see here some of the really popular areas of startup activity. So workplace maintenance and occupancy analytics is the biggest. 74 companies that we've identified in that space. Energy management software, second biggest. Huge area of focus, I think, for a lot of startups. 64 that we've identified there. 61 companies active in video surveillance, video management software and analytics. Again, big area of investment for companies. And what else is interesting? I think things like asset and maintenance management, digital twin, another big area, access control as well. So yeah, a lot of different types of companies that are involved in this space. And I think it's really interesting just to see the breadth of technology that's being applied to commercial buildings now. So look specifically now at two things. One, the amount of VC funding and private equity that's come into the business. And then also on the next couple of slides, we'll just look at some figures about acquisition activity as well. So in terms of investment, that's either from specific VC companies, private equity, or also corporate backers, and I'll mention those again later. We've seen a lot of investment since 2015. It's really ramped up since then. So if we look back at 2021, we estimated there was around 7.4 billion raised, and last year that was 5.9 billion, so significant amount of money. What we're also seeing is that startups are definitely benefiting from more interest in climate-related real estate technology as it applies to energy management. Especially in Europe, I think there's been a huge focus last year is energy efficiency and energy management. And we only see that as is increasing, not just because of some of the macro issues right around energy in Europe, but also, with these huge goals now that we have as a society to reach net zero. And total capital invested since 2015, we calculate is 31 billion. And here you can see how that looks over time. So definite trend upwards to 2021, which was the high watermark at 7.4 billion US dollars. And it tailed off slightly last year, but that's still the second highest year on record for investment in this space. And again, this isn't the market as a whole, right? This is specifically talking about startup companies, so those founded after 2012. And you can see that along the bottom because of course, as we go along through the years, like we keep to our definition of companies being around 10 years old. So, if we go back to 2015, that means companies that were founded no earlier than 2019. I hope that makes sense. It also excludes, in these figures, smart home funding. So M&A of startup businesses, since 2015, the same time frame, we've recorded around 338 startup acquisitions in this sector. And there was a continuing consolidation trend, which is definitely intensified in the last 3 years. So actually 63% of that figure, or of the total that we found, occurred in the last 3 years. So what does that look like? As you said, you can really see that the acquisition activity has ramped up in the last 2 years. And it follows the same trend that we identified in the investment activity, that 2021 was the high watermark for acquisitions, and it's tailed off slightly, but hardly really. Just 2 less acquisitions in 2022. So, my final slide here is really about the outlook for startups in 2023. So, based on what we've seen over the last 7 years, what we think potentially might happen, and I'm not an expert at predicting the future, but I think what we can see is that it's probably unlikely, in terms of investment anyway, it's unlikely to reach those kind of levels that we saw in 2021. So I think we would anticipate a drop-off in 2023 of total venture capital investment. Why? Well, I think there's a general consensus that the VC investment community as a whole, not just prop tech and smart buildings, is tightening, and there's sort of an economic slowdown associated with that. And I think, I'm sure everyone's seen in their feeds, there's quite a lot of anecdotal evidence right around the fact that it's harder to raise money now for companies. We'll see what happens in 2023, but I would be surprised if it reached the same level in terms of value and also number of deals that it did in 2022 or 2021. But what does that mean, like in terms of, if you as a startup company are looking to raise money, or you're wondering about what's going to happen just in terms of interest in smart building technology this year? I mean, I haven't seen any obvious signs that there isn't anything but a increasing level of maturity and confidence in smart building technology. So I think we'll still see more adoption of technology in commercial buildings through this year. And I mentioned it before, I think there's some real challenges around energy efficiency and energy management. We really need technology to help us to meet those sustainability goals and meet our sort of net zero ideas that we want to get to. Finally, a note on corporate venture capital. I think what we've seen over the last few years is that's played a increasing role in supporting startups. So those are sort of existing companies that have a venture capital arm who are looking to invest in startups. I think they increasingly see it as a useful tool to help them innovate, but also, to mitigate any potential competition that might arise. And I actually think that will probably still increase this year, but we'll see. I think we've already seen, for example, Carrier Ventures do a deal last month. So yeah, that's it from me. I think overall, like the smart building startup landscape is super interesting. There's a lot of activity. There's a lot of companies still coming to market with new technology. I think it was 20% increase in the number of startups that we identified in the last 2 years. So I think that's all a massive bonus and good news. But perhaps sort of tempered slightly with the fact that it might be harder for people to raise investment this year. So yeah, if there are any questions, I'd be happy to take them. We've got maybe a few minutes left.
Okay, Jim, I have a question here.
Yep.
What advice would you give startups looking to raise funding in 2023?
Yeah, okay. So, I mean, I would say, I mean, as sort of alluded to already, like I think it's going to be a little bit more difficult, but that doesn't mean that there isn't going to be money out there. I think we've seen, like at the end of last year, for example, Fifth Wall raise a massive fund to invest specifically in prop tech. So I think the money's out there. I think it's probably going to be harder to get. So I think you've got to be even more focused on what it is that you are trying to achieve, and in terms of what you are providing to the industry. So things like what return on investment, it'd be super clear about what value you're going to add, and I think that's what I hear from investors about what they really want to hear from the operation and maintenance side anyway of commercial buildings. If you can as well, I mean, partnering with, for example, commercial real estate companies, there are plenty of them out there now that are investing in startups as well. So, reach out to them, see if they're interested in partnering, see if they're interested in helping you incubate your technology. I think that's going to be even more useful going forward. So anything like that, I would recommend. Any more questions?
Yes, I got another one here from LinkedIn. Do you have any data on the geographic spread of these 800 or so startups? Yeah. Which countries they start in, for example?
We do, and I haven't included it in presentation, so I can't remember off the top of my head, but it is in the report, and we split it out from North America, Europe, and Asia Pacific.
Okay, next question. Which technology focus do you believe is most appealing to VCs as they look to invest?
Yeah, I'm not, obviously, I'm not a VC. I do talk to some of them. I mean, I think depending on who they are, right? So with the sort of corporate venture, I think that a lot of them now are super focused on what value is it going to add to their business. they need to prove the business case internally. So I think they're even more focused now on trying to prove that it's going to help their core business in the long run. But just more broadly with VCs, I think some of the things like anything to do with energy efficiency, energy management, and helping achieve those sustainability goals, ESG goals for commercial real estate companies is definitely an attractive space. And also, I would add to that artificial intelligence. I think that's really really popular at the moment as well. So maybe, if you can combine those two things, then you might be onto something.
Okay, great. Thank you, Lewis and Nicholas, for those two questions. I've got one more here. What role is corporate ventures capital playing in the space at the moment?
Yep. Okay. I think we covered that a little bit. I mean, I think I would just add that it is definitely something that is providing. They are providing more investment for the startup companies, which is great, right? Like, if they can help incubate new technology, bring it to market, that's great for innovation. But of course, the flip side of that is, you have to be sure, I think, if you're taking money from corporate venture capital, that you want to be in partnership with that company. Because ultimately, no one does anything for free, right? You are, what they're looking for is companies that are going to help their business as well. So I think it's definitely a positive thing for the industry, but also, I think if you are going to take that money, you need to be super clear about what that means to your business. Yeah. Anything else?
Yep. Lewis has another question here. With VCs tightening up where and who they invest in, do you see this easing up towards the end of the year for new technology starts, but also for companies going to Series B, C, etc.?
Sorry, I missed the first part of that.
That's okay. With VCs tightening up where and who they invest in, do you see these easing up towards the end of the year for new startups?
So, $1
million question.
Towards the end of the year, will it get better?
Yeah.
Oh, it's difficult to say. I don't know. I think a lot depends on, obviously I would say this, but what happens in the first 6 months. I think even from what I've seen in January and February, there's less activity. And I think, unfortunately, like a lot of things, it's cyclical. So I don't know. I don't want to sort of predict what might happen in the end of the year, but I think we'll still see, so we're not going to reach, I don't think we're going to reach 2021, 2020 levels of investment, but I think, something around 2019. I'll go back to that slide. I mean, we could see, something like that, something around 4 billion, 4.5 billion invested. I think that's perfectly, could well happen. All right. Well, look, thanks everybody. Appreciate you taking the time in your afternoon to listen to the feed. If you want to see it again, then we have obviously recorded it and we'll put it up on YouTube. And sorry for the mix up with the slides during the middle, but as I said, first time we've done this, and you'll see plenty more kind of live stream, live content from us. Hopefully with a guest next time. That's it. That's it from me. Thanks very much.